Hey traders, Raghee here, and in this free recap video, we're going to talk about crude oil. Now, crude oil was a trade that we took in front of the inventories report. In fact, this is our second crude oil trade in as many days. We took a buy yesterday, rode that up to the profit target we had up at 68.40, and then the market rolled down again, which really isn't a big deal. It re-entered the daily zone, which made me bullish in the first place. This is back in here, that highlighted yellow area. So we put on another long position, but this time, let me show you the alert that we did. So this time what we were looking for is ultimately a buy this time. And this is a very aggressive setup. The market had sold off rapidly into that zone. And then what we had was a entry at 66.85, and it was moving quickly from that area. We had maybe about 4 minutes, which is not my favorite kind of alert to place, but this was being opportunistic on some weakness. We had about maybe 3 or 4 minutes to put that trade on. The more slippage you are willing to tolerate, obviously you could have gotten something clear up to say 67, which is about a 15-cent difference, but nonetheless, we were looking for a move up that was going to be triggered by the inventories report at 11. So with the holiday, the inventories report got pushed from Wednesday 10:30 Eastern to Thursday 11 Eastern, and that was the volatility that we were looking to catapult this trade higher, and catapult it did. So the lesson here is this: when you're looking at upside targets, and we talked about this a lot in the chat room. For those of you that want to check out the midday update, check it out. And I talked a lot about the way in which targets need to be placed. And this area here, compared to the low that we got, which was this, at the time, the low that we knew was 66.63. And one of the most powerful things that we do in the chat room, it's really, anyone who's been exposed to this technique that I use is pretty much blown away. It's the closest thing to a crystal ball that I've ever come across. And once you understand the arithmetic behind it, it's super simple. But today's upper end of the daily price movement range was $1.30 to $1.50. So once we get the low on the day, which we knew by 10 minutes after 9 a.m. Eastern, we add the average to the high to that number. And what it did is it projected highs at 67.93, and I'm going to put that in here. It was 67.93 right there, and it projected another high at 67.30. Now, what I'm telling you is, I'm sorry, 68.13. Sorry, 68.13. There we go. So what I'm telling you is, as early as this low, as early as basically 9:10 to 9:15 a.m. Eastern, and an hour and 45 minutes in front of the inventory report, these highs were already projected from this low based upon the average price movement range. Now that's a terrific place to place targets. So what you do is you grab the low of the day. You can do it on the daily candle as well. I'm just showing it to you on the 5. You grab the low of the day and you add the price movement range. Now, the price movement range tool I introduced to everybody in the room quite a bit, so we'll save that for another recap video. But it's the volatility analysis through a service I've used forever. It's free. This company is a partner with many simpler trading brokers, Thinkorswim. For sure, the Forex folks are very well aware of this, and it's a service that I use, and when I show you how to use it in the chat room, then I give you guys the numbers in order to calculate these on your own. But know the value of having this number ahead of time and getting an idea of what the probability of the market moving up to this area is. This is a 68% probability zone. In other words, 2 out of 3 times, this is it, gang. So when you know there's a certain rhythm to a market, in this case crude oil, which we bought. And by the way, I still think there's going to be a secondary surge. I think we could probably get to about 67.30 on the next surge higher. And then I'll be looking for probably 68.13 up in this area for the first move and the second move. But I think there's still some upside here in crude. A lot of what's happened to crude is this ongoing NAFTA and the retaliation for the tariffs that will be going into place at midnight tonight. Let's see what happens. I think we're going to still come to a pretty positive conclusion, but we'll see how long the war of words lasts. But this is a good lesson on how important it is to project price movement ranges every single day, if not every single hour, and use these as targets. I'll see you in the next update.